Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. I hope you're doing well. We are looking at ticker symbol CASY, that is Casey's General Store. We're going to see if this stock deserves to be around $330. We're going to run a projected stock price calculation that factors in a number of things to see if the stock should be or could be heading higher or lower. We're then going to check and see what institutions and hedge funds are doing to see if that supports our narrative. We're going to look at some technicals and also the balance sheet. So without further ado, let's go ahead and jump on in and subscribe. All right, looking at this daily chart, we can see it looks like Finviz has drawn an ascending triangle. It kind of looks like a sloppy ascending triangle as this stock price regularly falls in and out of this pattern. And we can see that it has clearly fallen out based on the charting of Finviz. So it's probably an automatic calculated one, but let's look at the bigger picture as we always do. And it looks like this is a banger. I mean, look at this. From 2013, I don't know why I'm going to 13, $49. It's almost 10x in, let's say, 15 years. In 10 years, it's went from 390 to 244. So it looks like this year's performance is 47%. That is absolutely bananas. 20% year to date. That's beating the S&P 500. Okay. Looking at the sales, this is absolutely incredible. Up and to the right. Earnings per share up and to the right. And shares outstanding flat. That is exactly what we like to see. They, again, are profitable. They do offer a dividend. They are on a little bit of a pricey side. Their price earnings is 26. I like them around 15. That is pretty much the standard is 15%. Earnings per share this year is 10%. Next year is 8%, almost 9%. Gross margins are 19%, which for a grocery store is decent. I think Costco's gross margins are around 12 and 13%. Again, they are profitable. Shares flow under 100 million. That just means it's a volatile stock. Again, it's up 40% in a year, 47% in a year, and 20% year to date. So that's awesome. We're going to run my calculation and see if this stock deserves to be higher or lower. But before we do that, I am going to run the institution and hedge fund ownership page in the background. And we're going to go ahead and start the calculation right now. I worked at a microcap firm. We had financial regulators come in to price the stock. Every 100 million in sales was equivalent to a $1. And I also include the market cap because that's when big money can really move the stock up or down. And also, this does not account for dividends because the company is giving away a percentage of their cash flow. So this stock price will be on the higher side. Just as a forewarning, again, this calculation started out for micro and small cap companies. It does pretty well for the big companies like Tesla that don't have dividends. So again, we're going to go ahead and just jump on it. I'm not going to talk. So they have 12,280 million in market cap. Good for them. They do 471 million, 40,000 in income. Plus they do 14,590 million in sales. And that looks pretty accurate. And now we're going to go and account for the cash and the debt. We're going to go to quarterly and the balance sheet. They have 177 million in cash, which is actually the lowest they've had going all the way back until 2022, which is interesting. So they have 177,880,000 total debt. Not that bad, only 1 billion. Divide this by minus 1,583,610,000. Yeah. All right. So this stock price is going to be pretty high, just a forewarning, my calculated price target, but that just does mean the stock is going in the right direction, up. Okay, looking at total assets, they have 6.2 billion in assets, 3.2 billion in liabilities. Their assets almost dwarf liabilities almost 2 to 1. Um, it's like their liabilities are also going down. Well, at least from last quarter, it's kind of been hanging around the 3.2 area. Total assets does look to be climbing. So if we get to 6.4 billion in assets, 6.5 billion, then it's a 2-to-1 ratio where assets dwarf liabilities, which is awesome. Looking at institutional, or I'm sorry, insider ownership, Mike Spanos bought 200,000 at 275, so he's up nicely. Chief Merchandise Officer sold 394,000. Did he get options? Let's see, Brennan Thompson. Nope. So he just sold for a nice little payday there. So no red flags. I usually check that for red flags. No real red flags there. We don't see the CEO or anyone day trading the stock or swing trading the stock, which is good. Okay, so we're now going to take this and divide it by 36,830,000. So this is saying a stock price of $700, which is more than twice of current stock price of 331. That just means if my calculation is correct, I mean, I should probably build out this calculation to account for dividends because they are giving cash from the company to shareholders. But I don't think I'm going to because I generally don't like companies. I don't, dividends aren't even, blah, blah, blah. Income producing stocks are not typically my go-to. So I don't have that accounted for in this calculation. However, if I were to dividends trailing 12 months, I would take the 0.52%, multiply that by 4 because 4 quarters in a year, annually 2% dividend, giving away 2% of their cash flow. There would have to be some type of way to build that into my calculation. But with stocks like this, where I'm getting a 2, this is almost 100% from this calculation. What I need to see for conviction, if my calculation is nearly correct, institutions own 87%, and this is old data, and it shows that they are selling. Based on my calculation, I would think institutions and hedge funds would be adding this hand over fist. So we're going to check that in just a moment. In terms of price targets, let's go ahead and just chart really quick because this has just been trading very linearly. And I may have charted this one before actually. So let's open up our big database here and we're gonna go to CASY. I think I have charted this before. I have, and it looks like it has totally left. I mean, I don't know when I drew this, but it definitely acted as perfect support here. This would have been our buy signal launching off here. Okay, so just gonna do a couple things. All right, I drew that because I want to see how well the candles are respecting the Fibonacci's here. And whoa. What I'm gonna do is I'm gonna zoom in and see where these candles are potentially touching. So perfect resistance right here. You can see this red candle just right on the dot touches this. Resistance, perfect resistance. This candle butts up against it. Near perfect support. This comes up and touches this middle ring right here. Perfect resistance. Perfect support here. It gets rejected. Resistance, almost perfect support, perfect resistance. You can see this candle tries to break up the next month, acts as perfect support, breaks through this inner ring, falls out, perfect resistance, almost perfect resistance, breaks on up. So this Fibonacci does show that there is a lot of respect. So this is what we're going to do. If this stock continues to go up, which I I mean, based off of history, it looks like it's going to keep going up. Gosh, it definitely looks like it's trading in an ascending triangle, and we could probably get it to right there. All right, and then okay, so this is a generally a bearish pattern, and what we need to see happen is if we want to see this stock overtake to the upside, it needs to strongly break through up here. Um, Given that we've gone, when I say we are representing the stock, I don't own the stock, I don't have any exposure, unless it's in the S&P 500, which it is not. Why not? Anyway, it's gone up 1, 2, 3, 4, 4, 6, 7, 8, 9. Out of the 12 months, it's gone up 9 in a row, or not 9 in a row, but 9 out of the 12. So, and then looking back at history, there is a lot of breaks. You see a lot of red candles between these green candles. So to the downside, I think we see 305.95 if earnings are not that great. Considering this is a retail store, we could be thinking consumer confidence. We looking at Costco, Ross, it's a mixed bag. Kohl's had weakness, Ross did great. What are the different classes, middle class, lower class, upper class? What, I don't even know if that's affecting those stores or which classes shop where. Um, but like Casey's, is that a grocery store? Because I would think this is a grocery store, honestly. And I only say that because um, their sales, pizza. Interesting. So they do pizza, groceries. This is like a mini Costco, right? Maybe. Um, anyway, so to the downside, if the stock has lower than expected earnings, 304.61, 305.95. To the upside, 350. I'll say 350. And I'm just going to write this down. And if we do go down and test this 304, 305 area and it falls through, give it some time to consolidate. And what I mean by consolidate, like let it build. So like right here is a good area of consolidation. Good area of consolidation. We had some consolidation right here. Here's some good area of consolidation, good area of consolidation. Let it consolidate. Let it go a few months before. I mean, I'm not your advisor. I'm not certified or licensed, but let it regain its footing before going forward. And once it does start its next path forward, whether it goes up or chops sideways, it's gonna respect these lines. I would say 79% of the time, looking at how well it respected here, 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 and here, I think we're going to see some good respect as it continues onward. So we have this line right here is a good area of support. We've got it going all the way down here, which is back to mid 2018. It touched it back in 2022. I think maybe we see some sideways. Maybe it does a little U and comes and bounces off here and then goes up. A lot of different scenarios, or maybe it never does that, and we're in a new channel like that, and it just stays within here, and then maybe dips down here after the 2030 meltdown, meltdown. Okay. Enough talking. Thank you so much for watching. Oh, we didn't check institutions and hedge funds. Okay. So again, 87 is old data. New data, I'm going to say it's going to be over 100%. And I haven't looked because my calculation says almost a 100% move. I know institutions and hedge funds have a similar way of calculating uh, price targets, if you've seen my other videos. But again, this is an income-driven stock, but it acts like a growth company. 47% in a year, 20% year to date. That's doing a lot better than a lot of these old high-flying software names. Think of your GitLab, your Salesforce, UiPath, take your simple path. A lot of small caps, Shopify, etc. Goes on and on. Okay, so 87 is old numbers for ownership. New numbers, 105. Boom, 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 boom. Come on. That is a 18% increase. I'm going to say the Vanguards and BlackRocks probably, yeah, they increased and increased. They didn't increase substantially, but they increased a little bit. So 3.79 to 3.82, 3.2 to 3.3. So the Vanguards and the BlackRocks did slowly add to their position, but again, ownership is not 87%, it is 105%. Absolutely crazy. This is all a lot of these technical indicators here are in favor of the bulls. However, this every time the stock has come up here, look right here, look right here, look right here, here. It doesn't stay up there for long and it comes back down and rests. Again, the consolidation period, move up, consolidation period, move up, consolidation, move up. All right, I'm done talking. We've covered my price targets, institutional ownership. We looked at assets and liabilities. My calculated price target shows upside. Shocker. Hedge funds looks like they think there's upside. If you've made it this far, consider subscribing. Thank you so much for watching. Good luck if you're in this one. I really like this as a potential long-term hold. I don't know why this is not an S&P 500. So yeah, thanks. Goodbye. I'm done.